Hey, the Guaranteed Retirement Guy here, and I want to talk to you about the 5 top annuities to consider for income. And I know this changes all the time, but there are usually a lot of the same companies that will go to the top as far as income. Now, there are certain companies that are best for immediate income, and then there's companies that are better for maybe waiting 5 years, 10 years, and 15 years and beyond. So it really just depends on your strategy. If you're looking for guaranteed income right now, then there are certain companies, certain annuities that are best for that. And then those same annuities aren't best if you wait for 5 or 10 years. There are usually other companies, other annuities that will work better for that. So it really just depends, because some annuities will not earn as much of a roll-up rate, but they're great for immediate income. And then for those that earn a roll-up rate longer than others, meaning that the income value goes up over time, those typically are a lot better for income, down the road if it's 5, 10, or 15 years. So I'm going to show you some examples. I'm going to show you the best ones right now as of this video, the best ones for immediate income. And then I'm going to show you what's best for 5, and then what's best for 10 years, and then what's best for 15 years. Okay, and then of course, if you want to chat about even longer periods than that, book a call with me, and we can go over that as well. So all right, so I'm going to share my screen, and I want to show you basically what I did is I just I put myself as 60, and then I put my wife as 62. Okay, and then I just put my state, Ohio, just for an example. A lot of these are really a lot of the same carriers are the top ones in every single state. There's very, very small variations, maybe in surrender charges, but usually the income is the same. So let's look at that. So if I'm 60 and my wife is 62, and I want joint income. So if she outlives me, I want to make sure she continues to get this income, and of course, vice versa. So if I were to take income next month, these are the top 5. The top 5 would be Midland. Then you've got Corebridge, which is AIG. Then you've got a North American. And then you've got Fidelity and Guarantee. And then if you want to keep the B++ in there, which Sentinel is a really good company, Sentinel Security Life would be number 5. Otherwise, if we just narrowed it down to the top 5 A-rated carriers, then Allianz would be the 5th one on the list. So, and you can see the range is anywhere from $31,000 to $34,675 per year. Now, if I were to just do that monthly, because most of us want our income monthly, they would basically drop this in your account every single month. You'll notice that the highest is almost $2,900 per month. And that's guaranteed for the rest of your life. So if I'm 62 and I plan on living until 100, but let's say I don't. Let's say I live until 95. Okay, so that's 33 years. So 33 years, and let's go back to the annual. 33 years times 34,675. I'm going to take out $1,144,275 out of my annuity. Now, let's say I die. So I'm 95, my wife is 91. She's going to continue taking the same income. And, let's say she lives another 5 years, so she's going to take out another $150,000 and some change. So she's going to be roughly, total payout between the both of us will be like $1.3 million. So that's pretty good. When you're looking for guaranteed income that you can never outlive, and you're looking to maximize what you can get from your annuity, then you want to get as much as you possibly can. Now, there are some other factors to look at. I mean, income is just one thing. But if you're looking for maybe an annuity that has more growth, maybe you want something that has a higher chance of leaving money behind to your kids. There are annuities like Athene has some decent growth strategies, and Allianz as well. So, and even Midland and North American can have some decent growth as well as AIG. So we can compare those. But all of these really great companies to work with. Okay, so that's for immediate income. Let's talk about, let's say I want to wait 5 years. Okay. So I'm 60 years old, my wife's 62, and I want to take income when I'm 65 and she's 67. Okay, and you might want to purchase multiple annuities. Maybe you want income now and you want income extra income in 5 years and then 10 years and then 15 years. A lot of times people will do that because they get a lot more income that is increasing that will beat inflation over time. And usually that is better than buying an increasing annuity, because a lot of those increasing annuities, that go with inflation, they're really dependent on the growth of the index. So you really never know what it's going to be. You know it's going to go higher. You just don't know when it'll go higher, and depending on that index growth. Okay, so usually laddering annuities, purchasing several annuities at once and then activating the income later on, is my preferred choice as far as giving myself higher raises and higher income, much higher income as I get older. Okay, so if I wait 5 years, you can see the income goes up drastically. Now we're looking at Corebridge, Aspida, North American, Nationwide, Sentinel Security, Athene. So you can see that Midland isn't on this list for 5 years. So it really, really depends on what your time frame is. And we would go over that. And a lot of times you'll buy an annuity that's just best for immediate, just like I talked about before. And then we might use a completely separate company because we know we're going to activate income in 5 years. And so that company is better for that. Okay. Now let's see, how would this look if I were to go, let's just see here. I want to pull this out. Actually, I want to pull this out 10 years. Let's just see what this would look like. Now it changes things a little bit. Now you got North American on top. Okay. The income's $79,000. And again, this is from a $500,000 investment. Okay. Just so you can have the context for that. So you've got North American, Sentinel Security, Midland, and then you've got Investors Heritage, B++, and then you've got NASA, B++, and then you've got American Equity. Now, if I want to do just the top 5 A-rated, then I'd be North American, Midland, and then I would skip down to American Equity, and then I would look at Emeritus, and then Nationwide. Okay, those would be the top ones if you waited 10 years. Okay, so that's pretty good. We're all really in the $70,000 range. Obviously, the highest, North American, A+ rated company, it'd be a no-brainer to put the money with them. All right, let's look at 15 years. Same 500,000, but now I'm just waiting 15 years to start income. So I'm 75 and my wife is 77. Well, now look at this. Now you can see American Equity is the top one. Their sweet spot really is between 10 and 15 years right now because of the roll-up rate, which is 7% every single year. So you can see 95,829. That's pretty good. So if we take that out, even for 20 years, we take that out for 20 years, we're taking out almost $2 million. That's pretty good. So a high return there. So again, we got American Equity. So if we want to look at top A-rated companies, let me just change this to A- or higher. Okay, and we'll just look at that and see, all right, what are the top 5 companies if we were to wait 15 years to take our income? We got American Equity. We got AIG or Corebridge, number 2. And of course, AIG again, but we'll just keep that out of there. So AIG, Corebridge, and then Athene. And then you got North American and Midland right down here. So those are the top 5 for income. And you can see if you took the bottom of the 5, it's $84,000 a year versus $95,000. It probably is good to know and have that information. So especially if you're thinking, I might take this in 10 years, but I'm most likely going to wait longer. Then what we would do is we would look at one of these companies that is pretty darn close to being the top one at 10 years, but then is absolutely on top for 15 years. So you can kind of go in the middle there and say, all right, well, we're going to maximize our income during this 10 and 15 year period because we really don't know when we're going to take our income. That's kind of what you would do. So American Equity might be best between this 10 and 15 years. I mean, you can see if I were to bring this down like to 12 years, we'll see which one is the top one now. All right, so North America's a little bit higher, but look at this. American Equity is still close. That's like $1,000 difference, not even. So with that, and if you're not sure when you're going to take it, but you want to have as high as income as possible, you're like, I don't know, I might wait till I'm 72, but I might wait a little bit longer. Then you would probably choose American Equity versus North American if you're looking for the highest income because they're pretty close, but American Equity is going to give you more income later on if you were to wait. And so that allows you some flexibility. All right, so let me just show you real quick. I'm gonna scroll this back to 15 years. And I wanted to show you how this income value works, why deferring it works so well for some of these annuities. It's because of the roll-up rate. You see the roll-up right here? And so I'm going to go in here and show you what that looks like. You can see right here, well, they're showing you again, guaranteed, which shows the income, but it also shows what happens if the index earns nothing, which is, again, another extreme example. I always show guaranteed values as extreme because that is extreme, having no growth at all. That's really never happened. So if I go down here and say, all right, well, here's the average growth. And again, you'll notice that this index does not earn a lot, but the income value does because it's getting that 7%. So that growth, might only go $600,000 or $700,000 in account value. That's not very much. But if we're looking at income base, it is a lot. So and they also give you a 10% bonus. So they're dropping 50,000 in there, and that all earns 7%. So you notice during the years, this income value grows. The base actually grows to 1.3 million guaranteed, and when it's multiplied by 7.28, it's going to give you 95,829 per year. So that's why deferring annuities works so well, because you have a roll-up rate that is working for you all that time. So anyways, things to think about when you're looking, you want the highest income, and you're thinking, which are the top companies? These are the top companies. A lot of times these companies will move around. American Equity's always been close to the top. So has Corebridge. Athene's been usually close to the top, and so has these two. North American and Midland have both been pretty high. So I would say that is pretty standard for at least the last 6 months to a year. They've really kind of been rotating around each other. F&G though, F&G and Ameritas have kind of snuck up on top too. Just depends. So anyways, we can go over that. If any of this has given you value and you're thinking, you know what, I'd really like to find out what this can do for me, and whatever amount you have, we can look at it. I'm happy to go over it with you. We can look at the growth, we can look at the income, and obviously you know now after watching this video what the top 5 companies are right now. So anyways, look forward to chatting with you. You'll notice that there is a link below the video. Go ahead and schedule with me there, and I look forward to seeing you then. Thanks, and we'll see you in the next video.